Good morning and welcome to our show. Today we're very happy to have back with us on the show David Morgan. David Morgan is a renowned silver expert and the author of the Silver Manifesto. We're very happy to have David on the show with us. His expertise in the precious metals is well known, but also David's insights into the market at large are well respected. So David, thanks for taking the time out of your busy day to spend some time with us here today.
I appreciate the opportunity. Thank you.
Now, David, I do want to talk a little bit about metals and a little bit about yourself, but with everything going on in Europe and Greece, I would love to get your insight into the Greece, that's no better word than disaster. What exactly do you think is going on in that part of the world, and what's the fallout going to be?
First of all, this is opinion, and there's a lot on the internet, so you can take mine a bit with a grain of salt. And when you ask me, I'll certainly do my best. First of all, no one really knows the exact outcome. The big players really don't either. There's a lot of talk that even if they do not meet the deadline, which is today, and they won't, that they could exit and go back to the drachma, and that's a possibility. There's a possibility that they do nothing, but they don't exit the Eurozone. They're still in it no matter what kind of thinking. And the bigger view is the systemic risk, and most people know that as a metaphor of a stack of dominoes or a row of dominoes, and if Greece goes, then the next one goes, and the next one goes. And that is the biggest risk, because all of these banks are interconnected. If you look at it objectively, you can make the argument, well, Greece is a very small country. Its GDP is very small. It'd be like having a large investment portfolio, and if you had that portfolio and, you had a penny stock and it represented a very small portion of your overall portfolio, and if you lost that investment, then everything would be fine because it only represents, let's say, 2% of the total. And so what? You could take that view and you can make that argument, but it's really not valid, although the validity is true that it's a small portion, and in theory it wouldn't upset your overall holdings. The fact that that little part is connected to all the other parts of the portfolio is what some people don't really seem to get. And it's interesting that the German bund went up when there's a pretty good tie to the German bund. Most of the holdings are by the banks, and these banks don't want to lose. And so a lot to be determined. I think the main thing to keep in mind is really kind of after the fact. So let me be very specific on that. Depending on what does occur, we need to have our antenna up and really, really pay attention. Because if Greece exits, then it's very much easier for the pigs, for Portugal, Ireland, Italy, and Spain to exit. And there's problems now in Puerto Rico that I put on my Twitter feed while I was out of town. And then there's problems in all kinds of countries. Mexico could be an example. So if one is allowed out, or that one domino falls, and that takes place, we get verification, we're going to have more and more problems, and it'll probably accelerate. So very tenuous times, very interesting times is my favorite expression. No one at this point really knows what the best outcome is. You could let them exit, go back to the drachma, let them inflate away their debt, and that may seem for some parties to be the best. Certainly the Greek people might favor that, but the repercussions of that are to be determined. On the other hand, you could go the other way and they stay in the Eurozone and continue to use the euro, and more repression in their system, more repression than the people at large, and even that fails. I do believe that's the case, so I'll try to be a little succinct and wrap it up. I think no matter which choice is made, the outcome is pretty clear. There's going to be big problems in the financial system going forward.
Absolutely. Thanks for that. Now, is this just part of a larger systemic problem with fiat currency in the world? Is Greece just the first? I know a lot of people talk about Greece being a part of the problem, but the bigger problem is the entire system itself.
Absolutely. Well said. That's exactly right. It's, I don't have a great analogy, but I'll make one up. It'd be like an elephant having skin cancer, and you can only see part of the leg, and you see a little bit of, this outbreak on the lower leg, and you say, oh my goodness, well, we're going to take care of this, and, that's it. But if you step back from the elephant and you look over the whole thing and you realize, oh my goodness, that animal has this all over the whole, his whole body. It's everywhere. That's the situation. We're doing this like focused in on this little problem, like, oh, that's it, we can resolve that little problem. Well, you might take care of that little spot on the leg, but if you step back and look at the total, it's like, oh my goodness, this problem is pervasive. It's everywhere.
Indeed. And the boggling thing is, as these problems seem to keep rising, people still keep fleeing to the U.S. currency. It's again up under all these pressures in Greece.
Well, the point is that the perception is the dollar is safe. Relatively speaking, it is, but it's not the ultimate safety because everything pretty much is tied to the dollar, although the BRICS have done a pretty good job of trying to circumvent the dollar in a lot of the trades, etc. But nonetheless, at this point in time, everyone's still pretty much tied to the U.S. dollar. So the perception is that it's the place to go. But going back to my corny analogy about the skin disease, it's really just moving somewhere else on the elephant and not really being maybe in a zone that has, no visible problem. So you move over there and it looks like you're safe, but in reality, all you've done is, move the decks on the Titanic. You really haven't found a safe harbor. And most people have no conception of that being the case because they have such trust in the banking system, either consciously or unconsciously. They can't fathom the fact that there have been these kind of economic upheavals many times in the past throughout monetary history, but they're unacquainted with those, and they have such a strong belief and faith in the high technology world that we live in that it couldn't possibly happen now. And all of that's false. It's all a false belief. And the problem will be that it could manifest in a manner that they're unable to escape it. And that's when they're going to get the biggest, aha moment of their lives. Unfortunately, will be past the event instead of prior to the event.
I think that brings me very nicely now to talk a little bit about yourself. Now, David, you're well known for silver and precious metals. So why don't you tell us a little bit, what got you first interested in the silver market?
Well, it's a long story. I'll try to be brief. I'm sorry for me, but I was very interested in money from the time I was a kid. And then I started reading on my own at a very early age. And once I found out how fractional reserve banking actually worked and what a unbacked currency was and what the repercussions were, which I just outlined, I got very excited about learning more, but I also was a bit distressed even at an early age, knowing that these type of systems can only go for so long. So I got very involved in the counter-argument, which is called the honest money movement at the time, which is basically gold and silver-backed currencies and why they do a lot better. They're not perfect, but they're much better than a fiat system. So when I started my first jobs, I started investing in the precious metals, but primarily gold, because gold was more emphasized. I read more about gold. And I went through the first bull market, mostly as a gold investor. And then after the peak in the market, I did buy some silver. I started to question things like, how fast silver had gone up in the last, year, especially the last few months. Gold did as well. Why did silver outperform gold? Why did the Hunt brothers, that were some of the best known and wealthiest people in the country, at least in the public domain, why were they favoring silver so much over gold? So I started to do an independent study on the silver market, and I started to do comparisons of silver to gold and also where its place in the monetary system was in the past. So once I'd done, and I continue to do, of course, that type of research, I determined that really silver did outperform gold for a variety of reasons, and I felt from a longer-term perspective that it probably was a better investment than gold, although I always have taught you should have both. There's different reasons for owning gold than for silver and vice versa. So that was what got me into it, and the passion being that I wanted to right or wrong, not me individually, although you can protect yourself on an individual basis financially, at least to some degree, by owning precious metals. But I really wanted to get the word out there because in order to have a fair and just society, you have to have a fair and just monetary system. And today we have anything but.
David, thank you very much. I appreciate your background. Now, in the news recently, we've been learning a little bit about China, with so much instability in Europe. China, slowing down, still seems to be doing very well. And one of the reports is how China is dealing with gold and its precious metals. Maybe give us an idea of what China is like in the world market as far as their place with precious metals.
China is the number one buyer of precious metals and has been for quite some time. They're not only buying physical gold hand over fist, but what they've really done is taken their normal long-term view. And what most people don't realize, even a lot of the gold bugs, is that they've gone and bought gold in the ground. So they've gone all over the world and bought, anything from basically a startup project to a mid-tier project that's halfway completed to projects that are completely done, and they've just bought them lock, stock, and barrel. So they're buying future production of gold, and they're taking above-ground supplies of gold. I was one of the first, along with a few others, that stated over a decade ago that don't be shocked to see a gold-backed yuan at some point, and that could happen. The move from the most productive country to own the most gold is very, very well known if you study monetary history, even at a cursory level. If you go back to the British Empire, they had most of gold, and they had the world empire, more or less. When they lost their stability and they started to deteriorate, America became the rising star of the productive capacity for the world and also became the largest gold holder. So now we see it being repeated where China becomes the most productive country and they're having the biggest amount of gold in the treasury. So this is history really repeating itself.
David, thank you very much. Appreciate your thoughts on that. Now, before we wrap up, is there anything else in the news that you'd like to talk about?
Yeah, just a few points. One is, how to get a hold of us. I have a Twitter feed at SilverGuru22, especially with the financial markets in this disarray. You might look at that if you're interested. I put up news items for you for free, of course. And then we have a YouTube channel, which is Silver Guru. And if you really want to stay informed for free, we have a free e-letter. So just go to silver-investor.com. And if you're very interested in these markets, you can look at our menu, and we have a basic, a premium, and a mastermind service for those that want to invest in money, metals, and mining and get our insights to help manage through this very interesting financial situation.
And David, too, I wanted to mention, you also have another website, which is themorganreport.com. Now, you're so well known for the silver-investor.com and for silver. Why have you decided to rebrand and now start using the morganreport.com?
Because from the get-go, really, we've been more focused than just silver, although I'm known as a silver expert, and I don't want to lose that. The Morgan Report goes into pretty much a broad array. So, one of the things that we discuss quite often is the currency crisis. And so I wanted people that were interested in a service that helped them with the coming currency crisis, the current currency crisis, sidestepping part of the financial conundrum, any of those items. It's basically for an astute investor to have access to our work because it applies. So I wanted to rebrand the Morgan Report more on the basis of a financial report that helps with resource stocks in general, so all resources. We don't do much in the oil sector, but everything else. And also to kind of navigate. And the most important part is what to do after the event, meaning when gold and silver peak, which is probably 3 years away or so, 2 or 3 in my view. I don't want to leave everyone hanging with, okay, that's it, sell your gold and silver and do this. I want to be able to take them through to the other side. So I want to be looking and am looking for what will be the best opportunities post-reset of the financial marketplace. And that's a very difficult job, but I want to be there for people. So that's the thrust of the Morgan Report, is to take you into the peak, get you out near the top, and take you through that into the next financial reset, whatever that looks like.
David, thank you very much. We appreciate you spending the time with us, educating us and telling us about current events as well as things to look for in the marketplace. We've been speaking to David Morgan from the silver-investor.com as well as the morganreport.com. You can go there to, of course, to subscribe and find out more about David. David, thank you very much for your time today.
It's my pleasure. Thank you.
I'd like to remind our listening audience that the Stock Radio's employees and affiliates are not registered as investment advisors or broker-dealers. For a complete list of risks and disclosures, please take a look at our disclaimer page located at the bottom of every page on our site.